Welcome back for my April Dallas housing market update. Now, the Dallas housing market is heating up just in time for summer, but there is one sector of the housing market that is surprisingly weak going into the buying season, and I'm going to be revealing exactly what that is later in this video. So make sure you stick around until the end to learn how you can take advantage of it this year. We'll be digging into more detailed information in the video and breaking down how the major counties of Dallas-Fort Worth are doing, but first, for a 10,000 foot view of the entire Metroplex here in Dallas-Fort Worth, home prices are currently up 1.6% from March of last year to $375,000, with days on market being down by just 1 day from March of last year to 28 days on market. One metric to look closely at is months supply of inventory, which currently sits at 3.6 months supply, which is a full month up from last year. This is going to be a metric to continue to look at because along with the monthly supply available, new listings are also up 7.5% from last March, which means homeowners are finally letting go of their properties and adjusting to the reality of higher interest rates going forward. Now, if we zoom out a little bit on homes listed, we can see that the market bottomed out right around February and March of 2022, which was right when the Federal Reserve began raising interest rates, with only 12,744 homes for sale in March of 2022. Here in the Dallas-Fort Worth marketplace. And you have to go back to March of 2020 to see a market like what we're currently experiencing today, when inventory was sitting at 38,854 homes. Today we're currently at 32,178 homes for the month of March. So what does all of this mean? Well, for starters, the market is beginning to get back to pre-pandemic normalcy with a healthy amount of inventory, meaning we're currently in a balanced market with 3.6 months supply, which again is a full month up from 2022, and the last time that we had a market with this much supply was all the way back in 2020. Now, this isn't a buyer's market, which would require a 6-month supply of inventory or more, but this is what we call a balanced market, more typical of what we had been seeing here in the Dallas area before the pandemic. And if you're a buyer in this market, you can look forward to taking your time in most cases when shopping for a home, being able to get home inspections and negotiate repairs and seller concessions in most cases. Now, keep in mind, this is for the entire Dallas-Fort Worth Metroplex. There are some areas around Dallas where the market is still very hot, and with demand comes less room for negotiation, which is why it's really important that you hire a good agent who can help guide you through negotiations and communication with listing agents so that you can secure the house that you want once you find it. Now, the real question is where are things going to go from here? It's obvious that homeowners are beginning to let go of their low interest rate mortgages for various reasons, with life events becoming too important to put off any longer. And my best guess is we're going to be staying in a balanced market with relatively low price increases that trend alongside inflation for the next year. Now, most often when a seller sells a home, they go on to buy another one either within the same market or elsewhere. So moving forward, what we need to see here in Dallas is whether buyer demand is going to keep up with or outpace sales with interest rates being as high as they are. The Dallas housing market is one of the strongest in the nation, and it's the fastest growing metroplex in the country, and what comes along with that is a very robust new build environment. That means that not only do we need to maintain an even buy to sell ratio for the existing inventory that we have in the market in order to keep the market even, but Dallas also has to continue to attract new residents to the area to maintain the growth that it's seen since before the pandemic. And I'm going to be going deep on the new build situation later in this video, so make sure you keep watching because I'm going to be revealing a surprising fact about what's happening right now in the Dallas housing market and how you might want to take advantage of it. Now, before I continue, if you don't know me yet, my name is Corin and I'm a local realtor here in the Dallas-Fort Worth Metroplex. I've helped people move here to the Dallas area, as well as locals who are looking to downsize, upsize, or cash out. So if you have any real estate needs here in the Dallas-Fort Worth area, or you want me to refer you to a great realtor in your area, you can go ahead and reach out to me for a private consultation. You can find all of my contact information in the description below, and if you'd like, you can set up a Zoom video conference or a phone call with me via my Calendly link. So we've talked about where the Metroplex is as a whole, but it's time to break down things by the county. I'm looking at the 4 largest counties in the Metroplex and the 4 that most of my clients buy and sell in. That's Dallas, Collin, Denton, and Tarrant counties, and this encompasses most of the Dallas-Fort Worth area. Now, the first thing we're going to be looking at is sales price. Home prices in Collin and Denton County, which encompass most of North Dallas, are the highest, but what's interesting is that Collin County is the only county that has seen a drop-off from March of last year of 1.8% in sales price. And this is to be expected because when the market cools off, high-value homes drop first, and Collin County includes cities like Frisco, Prosper, and Allen, along with several other growth-driven cities in the north. Looking at Dallas and Denton County, we do see both are up sharply from last March, both being major growth centers and carrying our 1.6% pricing growth from last year for the Metroplex. There are definitely winners and losers in the housing market right now. If you're looking at this from an investment standpoint, buying more affordable housing in densely populated areas around Dallas and Denton is going to be the way to go. A major driver for Denton's pricing growth has been Little Elm, which has seen a 7% growth in pricing since last year. And if you've been watching my channel, you know I talk a lot about Little Elm on this channel. This is a firmly middle-class city, which makes it a great place to buy a first home in or own a rental property with plenty of job opportunities nearby. Its positioning next to the lake also makes it somewhere that will always see a high demand. Now, the city of Denton also has seen strong growth at 3.5% in the last year, as well as Flower Mound, which is a little bit more expensive in area, but well positioned between Fort Worth and Dallas. Now, going back to Corin County, the price drop has been driven largely by Frisco, seeing a 6.4% price drop in the last year. Frisco received a lot of hype during the pandemic, and a ton of people moved there from California and other coastal states over the last few years, but some of that luster has worn off. Now, part of this can be explained by Frisco being a higher-end market, which tend not to do as well in high interest rate environments. And Prosper has also been stealing Frisco's thunder recently, driving a lot of the money out of Frisco to the north, with Prosper having price growth of a whopping 11.3% since last March. Prosper is seeing a lot of high-end new build communities and has become the satellite suburb for Frisco for people who are feeling that Frisco has become a little bit too crowded. Now, something that I always find very interesting to look at from a county level is days on market. If you remember earlier, the overall market in this region has a days on market of 28 days, which is down just 1 day from last March. When we look at the 4 largest counties though, we see a different story, with days on market down sharply for Collin, Denton, and Tarrant counties from last year, but up in Dallas County by 3 days. Overall, it seems demand for buying is still as strong as it was last year, with buyer demand seemingly a little bit higher than last March. Where things get interesting though is when we look at our month's inventory by county, which just like the overall market is up sharply and more reflective of the pre-pandemic market we had back in 2020. The question again is, where are we going to go from here? As it's entirely possible that if interest rates stay elevated, we could begin to move more toward a buyer's market, at least temporarily. Now, right now there is a window of opportunity to get a home while prices remain flat and competition is lower before we enter another buyer frenzy. If you know anything about the Dallas housing market, you know that we have a lot of new builds here in Dallas, being one of the leading metroplexes when it comes to new builds in the country. Now, what's shocking about the data we have is that prices for new build homes is down 5% from last March, driven largely by homes in Collin County, where new home sales prices are down a whopping 16%. And this can mean a few things beyond just new homes losing value. For one, I think it's likely that new home builders are having to build more affordable housing, with new homeowners opting for less square feet, forgoing that third garage or the spare bedroom and sticking to the base features rather than upgrading the home. Home builders have also been offering many concessions, and there have been some price drops to keep inventory moving over the last year in this high interest rate environment. Home builders, unlike homeowners, don't have an incentive to hold on to their homes with the 2 and 3% interest rates. They're in the business of selling new homes after all, and keeping inventory moving is how they make money. Now, what might surprise you is that in the fourth quarter of 2023, new home builders in Dallas-Fort Worth area increased their building supply by 3% from the previous year, making it the second best year for new home starts here in the Dallas-Fort Worth Metroplex. And to complicate things any further, there's been news about Warren Buffett selling almost all of his D.R. Horton stock at the end of February, with home builder stocks hitting record highs, while builders have controlled a large segment of the market due to existing homeowners sitting on the sidelines because of their low interest rate mortgages. It's possible Warren Buffett exited because he doesn't expect builder stocks to rise much higher, or he expects a glut of existing inventory to hit the market in the next few years as interest rates go lower and sellers decide to part with those low interest mortgage rates that they've been holding off on getting rid of. This would shift the environment away from builders controlling the market like they have in the last year, and that could send builder stocks tumbling. But I'm curious about what you think about it. Why do you think that Warren Buffett sold? Do you think the market's going to be heading down, about to accelerate again, or is there some other reason? Drop a comment below and let me know what you think. Now, whatever the case might be in the future, there are some opportunities now with home builders to get new deals on new builds today, if you're in the market to buy, that is. Now, the benefits of the current market is that as the buyer, you have some control over the purchase process and you've got breathing room to make decisions and consider your options, for those of you who are ready and able to buy now. Now, current estimates still put the United States as a whole at 2 million units shortage for single-family homes, which is the real reason we haven't seen prices drop precipitously during this high interest rate environment. And if you don't know, every 1% of interest rate is supposed to represent 10% of a home's value, either up or down. So we saw a 10% drop in home prices here in Dallas-Fort Worth in 2022 from a high of about $400,000 down to $360,000. And prices since have rebounded back to $375,000, all while interest rates have gone from 3% up to 7%. Obviously, this has all been happening in an era of low inventory and an inflationary environment. Still, the resilience of the housing market has been a bit of a surprise for many people. And in most cases, when someone sells a pre-existing home, they enter the market as a buyer and buy up another home. So the only way that we're going to cure that shortage is with new inventory. By the time builders do manage to fill that gap, which could take another decade or more, interest rates will have come down from where they are now, driving buyer demand back into the market and closing the gap between the values and the rates. But it's still really important that you know that there's definitely a gap between the values of homes right now and the rates. Now, in the short term, if interest rates stay elevated through the summer, we could see housing stay soft with flat growth in pricing, which is probably for the best given the inflation that we've had over the last few years. But if the Federal Reserve does commit to its plan of dropping rates 3 times this year, then we could see a new surge this summer in buying as buyers try to beat the rush into the housing market with rates coming back down. Now, my recommendation is if you're in a position to buy, you shouldn't delay. Buying is very seasonal, and we are moving into the buying season where we're likely going to see prices move up in the summer. But right now is a great opportunity to buy just before that summer rush begins without the pressure of competing with a ton of people. For those of you who are waiting on the sidelines just for the rates to drop, you'll likely find yourself in another buyer-frenzy market if you do wait for everyone else to get off the bench. However, if you're not in a position to buy just yet, then it isn't the end of the world. You should get your finances in order, save up for a down payment, and if you're able to pick your purchase season, the best time to buy is December through February when prices dip seasonally. You can usually save a good 5 to 10% on the purchase price of your home if you're willing to buy in the slow season. And a lot of home builders are offering the best incentives on move-in ready homes during winter to get homes closed out before the end of the year. Just keep in mind that inventory in the winter is also low, so your selection may not be the best. And again, I don't see us going back to the pandemic level price increases that we had a few years ago, but we could still see anywhere from 3 to 5% pricing growth year over year going forward. And that's why I wouldn't recommend if you're in a position to buy now for you to wait. Because the thing is, you can always get into the market now, and when interest rates go down, you can refinance your home and get those lower rates again in the future. And if you do end up waiting for interest rates to go back down, prices will go up as a reflection of that, and you don't want to be in a position where you're trying to buy while everyone else is rushing into the market. And I want to thank you guys for watching until the end. If you found this information helpful, don't forget to hit that like button, subscribe to my channel for more content like this, and leave me a comment below with your thoughts on our current market or any questions that you might have. If you would like me to help you with your real estate needs here in the Dallas-Fort Worth area, reach out to me day or night. I'd love to represent you in your next transaction. And if you've got some time on your hands, you should check out another one of my videos above, and I'll catch you in the next one.